Hey guys, it's Jim from JAGfx.com. This is just another follow-up video to the one I did yesterday. It's the 2nd of February, Friday, 2nd of February 2018. Yesterday I did a daily chart. I think it was silver. This one is going to be on the USD Japan 4 hour. Again, it's based on the SAR method, or the 4 lines method. I'm not sure what I'm going to call it yet, but it's along those lines. And I'm just going to give you some more examples on how I'm thinking of using the 4 lines and the MACD Platinum in managing trades, etc. So we'll just assume, look at this vertical line on the chart here. To the left, I'm just saying, pretend nothing to the right of that line's available to me as yet. So we can assume that we've been in a sell trade here. It's coming down. There's a very bottom yellow line on this low here, just to the left of that vertical line. So I'll get rid of that vertical line. Now, what we're looking for, remember what I said in the previous video, we can make some certain assumptions that if there is blue dots on the MACD below the 0 level, we're looking to buy, and if there's red dots above the 0 level on the MACD Platinum, we're looking to sell. So blue below, buy, red above, sell. So we come down here and we've got this blue dot on the MACD Platinum. First thing I would do, if I hadn't done already, was move my stop to at least break even. So you've got a hard stop in place, not necessarily the reversal, but the hard stops in place. So we're assuming that it might go up any second, so that's what we do. Now here we have this high which was formed on that dot, then we have that drop off, so we've got another low. For a start, we can bring our top yellow line down to that new low, and here, because we've got sort of like a fractal, and I know it's probably the wrong term as I described my Facebook page, but price has come up and gone down. So it's like price is rolling over. There's been a pullback, then it's resumed the trend. Now people would argue that that's probably not a bearish candle, but it had a lower low, so as far as I'm concerned, it's bearish. So we bring out stop and reverse to the high, or just above the high of that candle there. So obviously we can see what happens to the right here. So now we're reversing, so we take a buy trade. So we take the bottom yellow line, move it up. We take the red line, which is stop and reverse, move it down. Take the blue line, which is our entry line, and put it where we took the entry. So just a quick reminder. So now we've got a buy trade on. Our risk is between the red line here and the blue line. Now this is going to get a bit messy, and this is one of the reasons I sort of picked this chart. As we come up, we don't get any new highs, so our 3 yellow lines stay out of play. But then as we move along, you can see where I've got the crosshairs. We've now got a red dot above the 0 level in the MACD. So a couple of options here. We can't move our stop to break even because we're below the entry point and we're in a buy trade. You could technically look left and think, well, let's just say we did it. So we look left from that dot and we see a fractal there. So price has sort of ground its way up and it's pulled down a little bit. Then we've had that bullish candle and that little bullish candle above it. So there's, to me, is like a bit of a rollover. So it's come down and gone back up again. So say we did move that to there, all it does is reduce our risk, but then as you can see, we're stopped out. So we're reversing here, so we'll bring that down. So we took a loss there, put that above our highs, and we put that on our entry point. So again, our risk is between the red and blue line, and you can see what happens there. You don't have to be Einstein to see that, but we have another low there, so we've got 2 lows, and now there's not much we can do here. We're just going to have to take this loss as price goes up again. So we took another loss, we're moving our lines, reversing our lines again. This is when it gets annoying, this system, when it goes sideways like this. So again, we're in a buy, and again we've got this, we'll just keep on going because it goes up a couple of candles first. So we've got newer highs, newer highs. Let me just check. And there's our next high there. Now we've got a couple of rules here. One is if price, we've got all 4 yellow lines in play. So if price goes out of these yellow lines to the downside when we're in a buy, like they have, it's just, see, they're pretty tight. Hang on, I'll see if I can, the problem is I always lose my sort. There it is here. So we're in this area here. We've got the 4 lines, 1, 2, 3, 4. Price has popped up, and it's come down out of the yellow lines just here. You can see it in that little candle there, then gone back into the yellow lines. Now, one rule says you can move your SAR up to that low there, and that's what I would do in this case. You get one more high, and by moving your SAR up like that, you're reducing that risk again. So as you can see, the risk is between the blue and the red line, which is, you can hardly see it on this 4-hour chart, but then price reverses, so we're now in a sell. So we took a small loss there, and we're back into a sell. Now these 3 other lines are out of play. Like I said, we're above the 0 level. We've got a red dot, so we're assuming it's going to be a sell. So we don't move the SAR level at all. We just keep on following it, and eventually we get a nice move down. Our stop wasn't really at risk. Now, as you can see, we've gone, why does it do that? As you can see, we've gone below the 0 level. We've got a blue dot. So we're looking for a buy. It's very tight here, and it's on that there. There's no real obvious fractal, but what you could do is bring it down to break even, just your stop, not your SAR. But we'll keep it up there for now. As you can see, prices continue to roll over. So to me, it's come down, gone up and rolled over. That's your SAR, which is just above that yellow line there. So we've locked in a little bit of profit there. What's happening here? Price keeps on going down. We've got a red dot below the 0 level. No bigger deal. It just means that price may continue down. Remember, this is just a guide. It's not set in stone. It won't do. Price will do whatever it pleases. So then what happens here? We get another blue dot. It's right on that little bullish candle, and the candle straight after it drops again. So what do? Move the fractal down. We're looking price, blue dot below the 0 level, looking to buy. Now we've got all 4 lines, because a new low there. We've got all 4 lines in play in that area, and price pops out and comes back in. 2 options. Price has gone out of the 4 lines and come back down, so that's one way of moving the SAR, and it's just another fractal too. But having said that, have a look where the previous one is. So it'd only be bring it down a pip or 2, so it's not even worth the hassle. But you get the idea. We've got another new low. We're still below the 0 level, and then price just gradually grounds up, and we're now long. So we've taken a profit between the red line and the blue line. Not a great one, but we're in a sideways sort of market. So we're now in a buy. Let's have a look what's happening here. So we just move all our lines around again. Basically just reverse them. Our risk is between the red and the blue line. We're now long. So we're looking for new highs, and there's another one. There's another one. And there's another one. So all 4 lines are in play. I know it's getting a bit tight in this chart, and we'll have a look here. And there's probably not much we can do here. We're going to take a loss. You can see what happens to the right. So price just drops. There's no chance for us to, we've got a red dot there. There's no chance for us to put a fractal anywhere, but below the SAR anyway. So we're just going to take the loss again and do that. Now this will happen in sideways markets. And this is one of the drawdowns of this method. But having said that, in the meantime, you could be using another method to complement this one, where you could be picking off these small trends. It's up to you. I'm just trying to give you ideas here. So we're in a sell now, and we're going down, and we get a blue dot below the 0 level down here, and price just drops away. So we're going to reduce risk. We're going to bring that down. There's a little fractal there, so price has reversed and resumed the trend, which is good. We keep getting new lows, so we bring the yellow lines into play as per normal. New low, new low, new low, so and now we can certainly, if we wanted to, because we're below the zero level, we can bring our stop, hard stop, to break even, just to make sure we don't lose anything in this trade. You can leave your SAR, you can separate your SAR, which is just your reverse, or your stop and reverse, and put your stop in one place and your reversal in the other place. Doesn't matter. So we'll look for, coming down here, we've got another blue dot down here. There's no obvious place to put your, move your SAR level. Price starts heading up in this little candle. I know it's very tight, but then we have that bearish candle, drops right down. So we get another low there. And that to me is a perfect little place to bring your SAR. We're assuming that price is going to go up. So we want to lock in some profit there, which we have done, and price heads up. So bang, up we go, we take the profit. The MACD is correct in its assumption, price is heading up. And we'll just move these yellow candles here. So these two are out of play. There's our risk between the two. We're going up. We're just going through the zero level here, so we're no need to move anything yet. And we continue up. And now here's a good example. And I've lost it. There it is. Price has gone up. We've got the 4 yellow candles in play. I'll just move it along a bit. Might be a bit there. We've got the 4 candles in play. 4 yellow lines in play. Price has come down, broken through the bottom, then gone back up. We haven't got a red dot as yet, but that would be enough for me to move my SAR up to that level. That's one of the rules. So we keep on moving up. We've got new high highs, high highs. So we can't lose anything on this trade. And look, there's nothing to stop you, as I said in that video yesterday, to take profit at any time as your trade's progressing. You know, you might look to the left there and say, oh, I've got the previous high, I'm going to close out half my position, and my stops at break even, you know, stuff like that. Especially as you got a red dot here now on your MACD Platinum. So we've got that sort of bearish candle at the top there. There's no real other obvious place to put a fractal. It drops down one, then we have a little bit of a pullback in price. So you got that little sort of, it's a little bit of a pullback. That would do me. I'm assuming if it breaks that low there, with the MACD rolling over like it is, or just about, we've got a red dot with it rolling over slowly. We're locking in that profit and we're short. Now we're short, so we've taken the profit there, reverse to a sell, move your lines as per normal. Those ones are out the way because they're not in play. You can see the risk between the red and the blue line again. Ideally, we want to get that red line on the other side of the blue line. There's your, we've got lower lows. We've got three lines in play only at this stage. Then price pulls back. We've got a blue dot above the zero level, so we'll just let that slide for now. We're still in blue dot above the zero level, blue dot above the zero level. Our SAR is still not in trouble. Then we've got a red dot and price drops away. So other than having a new low, we've also got another place to put a fractal, move our SAR. So we're reducing our risk on this trade. Our risk is now between there and there. We've got a nice profit on the table. Again, it's up to you. Break that recent low in this area. Look at that. That's looking, prices sort of got that low and bounced again. We can, you know, I can see that now after in hindsight, but it'd be a good place to close out half your trade. Your MACD's gone through the zero level. We'll just keep on playing like we're going. So there we are, and we have a blue dot there. We're below the zero level. We're expecting to go up, and as you can see, we've already had a bullish candle there. Price sort of consolidated a bit, but it's given that obvious little high there. That's where I would have my SAR. So you move your SAR there, it's all, which is perfect because there's your blue dot there. You even got another candle, so you've got plenty of time to think about it, 8 hours to think about it, and bang, up price goes. So we're going up now, we're in a buy. And that's a pretty sort of tight, flat, sort of to the left here. That wasn't great trading, but we got through it pretty well. As price heads up. Now, like I said in the other video, the lines aren't really necessary. They're more of just a visual aid. So I know where my entry is, where my stop and reverse is, and just gives me an idea of strength. See, with these big candles, price, the trend you can assume is flying. It's going up because they're spread apart. But once they start getting a bit tighter, that means that the momentum's sort of dying a bit. Now, as we get up here, the lines are getting closer. We've got 4 lines in play. No dramas yet. You can see this one's a bearish candle. Now this one's definitely a bearish candle, and it coincides with a red dot, but then price consolidates and starts heading up. I'd hate to say it, but that's Captain Obvious for a SAR level. So they're locking in profit from there to there as price continues up. Let's have a look. Look at the MACD's heading down, so we'll try to lock in more, sort of a better SAR level here. And we've got one there. Alright, so what do we got here? MACD still heading down. That one there would be the obvious one. See how prices come down. We've had this little spike up. I know it's probably not an ideal bullish candle, but to me it's just getting that little sort of curve with prices. And for a fact, if the MACD's heading down, we're making an assumption it's going to go down if it's above the 0 level. So there's more of a chance it's heading down than it is heading up. And we can see what's happening to the right of us, but we'll just continue. I'll just try. So we've locked in that profit, nice profit. Now we're going to a sell. That's the video at nearly 17 minutes. So they're at a play, that's our play. Again, we've got our risk, new low. We just assume it's another new low there. Price goes up, threatens our SAR, but doesn't quite break the previous high, which is great. We've got a new low there. Now here we come to a blue dot. We're assuming a buy again. There's nothing real obvious to the left there, other than where we've got our SAR level at the moment. You could probably bring it down to that other candle, which just brings it in a couple of pips. There's nothing super obvious. So we'll just give it a couple of candles. You can see prices falling away. Sort of, you've got that rounded top there. I want to reduce my risk as soon as possible. I'm assuming price is going to go up, and we can, as I said, we can see on this one. So it does roll down. If you wanted to get out at break even, that's up to you, but we'll continue on. So we took a small loss there. We're now back in buy mode, and I'll just run through this quickly as we'll understand the concept of the lines moving up. Where's that red? We're up to a red dot there, and we've got that bearish candle, then that bullish candle immediately after. There's your bang, straight on the entry. So it's locking in profit, or not locking in a loss. We're making sure we don't have a loss. And we've got another red dot there, and we have that candle right behind it. There's another chance to move that up. Yep, sorry, wrong line. Move that up. Move that up. Move that up. And we're short there, and so on. We'd be long there. So that's basically it. That's coming up about 20 minutes. That's on a 4-hour chart. Now imagine doing this, say for example, on the 4-hour chart, 6-hour chart, 8-hour chart, 12-hour chart, and a daily chart. All these small moves, you'd pick them up in all the, even if you trade to one pair. I'm not sure how it go. I might go into a demo mode and try it just on one pair, see if it's a viable option or not. But there's plenty of decent moves there, and your MACD Platinum is the main thing that you base your decisions on. Ideally, you want to try and get into a no lose or reduce your risk on your trade as soon as possible. Once your trade's open, then you can give it a bit of breathing room, and you can be a bit more, use a bit more discretion, etc., when it comes to placing your SAR level or your reverse level. And like I said, no problems in separating your stop and your SAR or your reverse level, no problems at all. Alright guys, hopefully that's not a bad video and gives you a better idea. I'll probably do one more of these. I might try zooming out a bit, in a bit, and seeing if I can just make it a bit clearer. This is sort of the perfect way I like to look at charts, which is probably not ideal for videos. Anyway, thanks for that. Be careful, non-farm payrolls are at about 2.5 hours from when I did this video, and I'll chat later. Cheers.